Figma making its Wall Street debut here at the NYSE. The stock opening at $85 a share after pricing at $33. Right now it is trading at $107.55. Our own Andrew Ross Sorkin spoke with the company's CEO earlier today. Joins us now, Andrew. This one was, I think, did have plenty of build-up, and it's kind of redeemed itself here in terms of the first day performance.
I mean, it's been a remarkable thing. It's up, what are we talking about? Basically 3x. This was a company, by the way, started out the day with what we thought was going to be a $20 billion valuation, $19.3 billion to be exact. I don't know if you remember this, and we talked about it earlier this morning with Dylan Field, who co-founded this company. This was a business that had been sold to Adobe just several years ago for $20 billion. Antitrust regulators said it couldn't be. The deal was scrapped. It looked like the future of Figma was to some degree in doubt, at least as an independent company. And now I'm sure the Adobe folks are sitting there watching this saying, if we'd gotten it for $20 billion, it would have been quite the steal. I want to show you a little piece of quick tape from that interview this morning, just on an emotional level. This is a 33-year-old fellow who co-founded this company. I should say he left Brown, by the way, to become a Thiel Fellow, Peter Thiel's fellowship, for folks who says you don't need to go to college. Well, this guy didn't need to go to college, and he built this.
Share price is moment in time. You know, we're going to see all sorts of behavior probably today, over the weeks ahead. And, you know, I'm not going to say it's just noise. You can't tell people that don't look at the elephant in the room. You know, there's an elephant in the room. It's dancing. It's drunk. But I think at the end of the day, what's really important here is that we control the inputs. And so what I've been talking about with the team is we have to stay focused, stay on mission, listen to our customers.
Interestingly, Mike, you would also appreciate the compensation package that was set up for Dylan by the board is actually very Elon Musk-like in that there are price targets for the market cap of this company, which, by the way, I should note, if they stay this way, have already been blown out completely. Yes. So it is quite a day for Figma. It's quite a day for Dylan, who I've watched for many years try to build this company, and so it's quite something to see.
It is, and you know, just when it comes to those thresholds, right, where those extra incentive compensation grants kick in for him, Andrew, I think they start at $60 a share and go up to like 130. So, but that gives you a sense of where the board thought like a stretch goal would be, right? 60. Now the stock has to stay there for like 60 days.
Yes,
so it's not like a moment that it just, you know, triggers it. But it, you know, I guess if you're looking to buy the stock, it's a $60 billion market cap. It's like $1.5 billion maybe in revenues next year. You have to understand that it's getting pretty aggressive, I would imagine.
Well, of course, the question, as Dylan referenced, is it a drunk elephant or not? We'll see if it's a drunk elephant or not. We're also, I think, going to see whether this is ultimately a bellwether. And I'll tell you, just being on the phone with a number of bankers on Wall Street today who are, of course, watching this with their mouths agape, saying that there is a pipeline of deals, some of which I think they were worried about prior to this IPO, about getting out the door, and now saying, oh, my goodness, the window may have just stretched open, and it's open wide. How long it's going to be there, we don't know, but we may have to try to jump through it. So I think we're going to be seeing a lot more headlines, not just mornings like this, but headlines about companies that are going to plan to go public on the back of this.